All right. You know that feeling when something has just been, well, messy, a bit like a tangled ball of yarn. For years, that's pretty much been digital finance, right? Lots of policy uncertainty, rules felt kind of fragmented. But if you've been watching, you've probably felt this anticipation building, a real hunger for some clarity. And then bang, we got that line, the one many in digital finance we're basically waiting to hear. July will be a big month with a bill signing for Genius and Clarity going to the Senate, straight from David Sachs, the White House crypto czar.
Yeah, and that wasn't just some throwaway comment. It's huge. This federal action, it really signals a massive turning point for the whole financial sector, really, but especially for places like credit unions.
Exactly. So that's what we're digging into today.
That's the mission, yeah. To unpack what this long-awaited regulatory shift actually means. How did we even get here? And crucially, why it's so significant for, the future of digital assets and traditional finance.
It's quite a journey to get to this point, isn't it? Because, rewind just 3 years. The whole idea of blockchain and stablecoins specifically being relevant to a credit union. Honestly.
Temple weren't buying it?
Not really. It was often dismissed, right? Like premature or unnecessary.
Yeah.
We kept hearing, regulations miles away, blockchain's too speculative, stablecoins won't get institutional traction. Felt like it was all happening way out on the fringes.
Absolutely. But, despite that skepticism, something important was happening. Quietly, maybe, but definitely happening behind the scenes. Regulators, well, they were listening. They weren't just shutting it down. Financial institutions were dipping their toes in, experimenting. And new voices from both private companies and, importantly, from government started kind of aligning.
Aligning on what exactly?
On a common goal, really, creating a safe, auditable, and inclusive way to digitize the dollar. But critically, one that includes the existing financial system, not replaces it. It was less a Big Bang revolution, more like a steady evolution, but definitely heading somewhere specific.
Okay, so you have this quiet evolution, this growing consensus. How do you make that real, especially with something as core as the dollar? That brings us to the legislation, I guess.
Exactly. The answer, or a big part of it, comes in these two key pieces of legislation that grew out of that movement. The Genius Act and the Clarity Act. Think of them as maybe the twin pillars for this next phase.
Right. Genius and Clarity. Let's tackle the Genius Act first. So its purpose is a clear legal framework for stablecoins. Sounds straightforward, maybe a bit dry.
It sounds dry, but it's more than just rules on paper. That's the key thing to grasp here. The Genius Act isn't just about setting regulations. It's fundamentally about shifting the perception of stablecoins, moving them from, that speculative crypto bucket into something seen as a regulated, almost bank-grade instrument.
Okay, how does it do that?
Through the details, this list you mentioned, explicit definitions, clear oversight, specific capital requirements, robust consumer protections. Sounds like bureaucracy, I know, but that is the bedrock. That's what allows these huge, multi-billion-dollar financial institutions to finally treat certain digital assets with real gravity, like they treat traditional money. And crucially, this bill draws a very, very bright line.
Line between what?
Between the compliant, institutionally backed stablecoins we're talking about here and the other kind. The algorithmic ones, the unbacked tokens that, let's face it, cause some major blow-ups and crises. That distinction, that's the real game changer for institutions needing stability.
Okay, that makes sense. Drawing that line is huge for risk management. But legislation is never perfect, right? Is there a risk this clarity actually adds new kinds of complexity for, say, credit unions trying to navigate it? Genius is just stablecoins. What about everything else in the digital asset world? Bitcoin, other tokens. That's where Clarity fits in. It's heading to the Senate now.
That's exactly right. Genius is focused, nails down stablecoins. Clarity takes the wider view. It basically says, okay, these other types of digital assets, these blockchain networks, we're going to regulate them under existing laws, securities laws, commodities laws. It's about harmonizing the approach, bringing it all under familiar umbrellas.
So they work together.
Yes, very much so. Connect the dots, and what you see is the Genius and Clarity Acts together, marking the real start of a properly regulated digital asset market in the U.S. And here's what's really transformative, I think. These bills do more than just say, here's how to comply. They're effectively giving credit unions, banks, everyone permission to build.
Permission to build.
Yeah. It's like saying, look, the guardrails are finally going up. Now you can innovate safely within these lines. It removes a huge amount of that regulatory uncertainty that held institutions back.
Okay, legislation, permission slips. Great. But let's get down to brass tacks. For someone running a credit union, juggling a million things, or even just for a member managing their money, why should they really care about stablecoins? It feels like another complex thing to add to the pile.
It's a totally fair question, and the answer, when you boil it right down, is actually pretty simple but also profound. It comes down to 4 things: control, speed, transparency, and optionality. Things that, let's be honest, our current payment systems often struggle with.
Okay, unpack that a bit. How do stablecoins deliver on those?
Well, think about stablecoins, the properly designed, regulated kind under Genius. Think of them as a kind of digital extension of the traditional deposit. This is really important. It means credit unions don't necessarily have to hand over value movement to some third-party fintech. They can keep that vital function in-house, maintain that direct, trusted relationship with their members.
Right, keeping it within the credit union ecosystem. So what are the tangible benefits then for the credit union and its members day to day?
Okay, picture this. Instant P2P, person-to-person payments, and A2A, account-to-account. No more waiting days or even hours for funds to settle. That pending notification, gone. That immediate movement of funds isn't just nice to have. It significantly cuts member frustration and boosts loyalty.
Huge. What else?
Lower transaction costs, especially noticeable for merchants accepting payments or when you send money across borders. That gets cheaper and faster. Then there's real-time treasury management. This gives both the institution and even businesses or members much finer control over their liquidity, seeing and moving money instantly.
Interesting. And you mentioned innovation.
Yeah, these stablecoins become new rails. You can build new kinds of reward programs, different lending models, loyalty schemes. And the credit union can design these themselves, tailored to their members, not just use some off-the-shelf thing from a vendor.
Okay. And for the credit union itself, operationally?
A massive one. On-chain transparency and auditability. Imagine a ledger where every single transaction is visible, verifiable, in real time. Think about compliance reporting, fraud detection. It becomes much, much easier and faster. Less chasing paper trails.
That sounds incredibly efficient.
It is, and maybe the most strategic point for credit unions. Stablecoins allow them to innovate without being totally dependent on outside crypto exchanges or specific token issuers. This is key. A credit union could potentially issue its own stablecoin, backed by its own reserves, serving its own members directly.
Their own coin.
Yeah. It lets them embrace this digital future while staying completely true to their core mission, member service, trust, community focus. They control the experience.
Okay, so bringing this all together then. It feels like the message is pretty clear. Washington is maybe finally catching up to where technology and, frankly, market demand have been heading for years.
Yeah.
The stablecoin era isn't some future hypothetical anymore. It's here. Legislated, regulated, institutionally backed. It really does feel like more than just a shift, like a fundamental replatforming of finance might be underway.
I think that's fair. And, while it's always easy to just react when big changes hit, for credit unions, this feels like a really unique moment, a genuine opportunity, a chance to really lean into their core strengths, that trust, that transparency, that member focus, and bring those values squarely into this new digital environment. It's about getting proactive, not just, waiting to see what happens.
So yeah, the source material said buckle up. Seems appropriate. A new chapter in finance is definitely opening. And maybe the question for you listening right now is, what does this new chapter really mean for how you interact with money day to day? How might it change what your financial institution can offer you? What possibilities could it unlock? Definitely something to think about long after we wrap up this deep dive.